Stocks a little bit higher, looking close to records here ahead of a busy week for the Fed. But will Jay Powell say anything to change the market's view on where the central bank might be headed? Brent Schutte is the chief investment strategist at Northwestern Mutual, and he joins us now to discuss. So, Brent, let's start with the Fed. We get Powell speaking tomorrow and Wednesday. Now, he's already released the text of what he is going to say to lawmakers, but obviously this market is going to hinge on everything the Fed chair says. Do you expect there to be any news out of what we hear from Powell over the next couple of days?
No, I think Powell's going to kind of toe the line and say that he'll help if need be, but there's no way the Fed's going to raise rates in 2020, and the bar is really high longer term. And so I almost wouldn't even watch it because I don't think much new will be shed. And the reality is the Fed is a different Fed than what they were. They're much easier. They'll always be easier. There's no rate hikes in 2020, and the bar in 2021 is still pretty high unless inflation gets really far from 2%.
So coronavirus. A lot of talk right now about how the equity markets seem to continue to move higher here, even as the headlines are very negative. But we're seeing a very different story in treasuries and what's been happening with bond yields. Who's right here on what is happening with global growth?
Right. So I guess there's a couple different comments there. One I'd make is that the number of cases of coronavirus it peaked on February 4th and has actually trended lower since then. And so that's why I think the market is taking it more as a positive, because the number of new cases is continuing to trend lower. And so that gets the market to thinking about what happens on the other side of this, which is an economy full of global stimulus and primed to move higher. The bond market versus the stock market, I think it's bond market people hedging their stock market bets. And so I hear this narrative all the time that the stock market is only up because of the Fed and the bond market is right. I disagree. The way that the Federal Reserve impacts the stock market is by holding bonds artificially low. So they bought a lot of treasuries, not just here, but across the globe. And they're anchoring rates below the rate of inflation. And so in that environment, of course, stocks would go higher just because the bond market has impacted. So the two are kind of linked at the hip, not separate from each other.
All right, so Brent, when you look at the market right now, what are you recommending to investors? What do you like right now? You're still overweight equities relative to fixed income. What are you seeing there?
Yes, we still like equities. I think as long as the bond market behaves, and the Fed is certainly not going to let at least the bond market go too far from where it's at right now, I think equities are still well supported because, as I just mentioned, those two things are connected at the hip. Mm-hmm. So if you were to have a bond market hiccup, it would cause a stock market hiccup. But I think the equity markets still move higher because the economy keeps going, because the Fed has no desire to stop it. I guess the one thing I would say is that investors, the recipe of the past 12, 16 months during this time of political uncertainty was to be in defensive sectors and defensive names and to be overweighted towards the U.S. You can take your favorite end of the cycle chart, so take LEI for example, and overlay growth versus value. When LEI is moving lower, growth outperforms. When it moves higher, which we expect it to move higher, value outperforms. The same thing with large versus small, the same thing with U.S. versus international. Given the fact that we think LEI moves higher, we are moved more towards small caps, cyclicals, and we do still like international stocks.
All right, Brent Schutte is the chief investment strategist at Northwestern Mutual Wealth Management. Thanks so much for joining us. Talk to you soon.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.